Over 138 billion Shiba Inu tokens just moved back to exchanges in a single day, and the price is telling the whole story. Buyers are struggling to absorb what sellers are pushing out. When on-chain data and price action align this clearly, something significant is being communicated. Are you paying attention? This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. February 2026 has placed Shiba Inu under sustained examination from traders and analysts who track on-chain data with precision. The broader narrative around this token has been one of prolonged price pressure layered on top of weakening demand signals. That combination produces an environment where any attempt at recovery faces a ceiling built from available sell-side supply. For weeks leading into February 21, Shiba Inu had been navigating a difficult stretch. The token had fallen sharply from a peak of 1,017 units reached in the opening days of January, then continued grinding lower through most of February. The wider crypto market offered little support. Sentiment indicators across the industry remained deeply cautious, with fear dominating the decision-making environment for retail participants. According to on-chain analytics reports, Shiba Inu has been consistently producing bearish signals in recent weeks as Netflow readings have climbed steadily. Exchange Netflow is a metric that measures the difference between tokens entering exchanges and tokens leaving them. When the number is positive and rising, it means more tokens are being deposited for potential sale than are being withdrawn for holding or purchasing. Sustained positive net flow is one of the clearest on-chain indicators that sellers outnumber buyers within any given window. As of February 21, that reading has not only remained positive, but has accelerated sharply, creating real friction for any price recovery attempt the token might otherwise mount. The headline development on February 21, 2026 is the exchange net flow figure confirmed by on-chain analytics platforms. According to reports, the Shiba Inu exchange net flow surged over 6% on the day, landing at 138 billion tokens. To put that number in plain terms, during the past 24 hours, the volume of Shiba Inu tokens deposited onto exchanges for selling purposes exceeded the volume removed for buying purposes by more than 138 billion tokens. That is not a minor imbalance. It is a gap that communicates clearly where current market participants stand in relation to this asset. This reading arrives on the back of a connected data point from earlier in the week. As per on-chain data, another inflow wave of over 152 billion tokens had entered exchanges in the prior 24-hour window. That earlier surge was accompanied by growing exchange reserves and rising net flow readings, with analysts noting that the elevated liquidity staged on platforms was directly capping upward price momentum. Even tokens not immediately sold at the time of deposit contribute to the overhead burden. As those tokens remain positioned for sale at current or slightly higher price levels, they act as a ceiling that prevents the price from advancing without significant demand to offset them. As of February 21, Shiba Inu was trading at approximately 651 units. The widely discussed community goal of removing a zero from the price appears no closer than it was at the opening of February, with the on-chain picture offering little immediate relief. The raw numbers surrounding this net flow event provide important context. The 138 billion token reading represents a 6% single-day acceleration in this metric. According to analysts, exchange net flow reaching this magnitude during a period when the price is already under pressure amplifies the selling dynamic rather than simply reflecting routine portfolio activity. It indicates that a meaningful portion of holders chose this specific window to move their tokens into liquid positions on trading platforms. As per market data, Shiba Inu's total market cap as of February 21 stood at approximately $3.83 billion. Trading volume over the preceding 24 hours reached approximately $117.66 million. A market cap of $3.83 billion against a daily volume of $117.66 million produces a volume to market cap ratio that is moderate, confirming that market activity exists but lacks the surge characteristics typically associated with a genuine trend, reversal, or demand spike. Two data points offer a measured counterweight to the bearish flow picture. Community trackers note that the number of unique active wallets in the Shiba Inu ecosystem saw a modest 0.87% rise in recent sessions, and total on-chain transaction count climbed by 0.81%. These figures suggest that underlying network participation has not completely evaporated. Analysts note that rising active addresses and transaction counts, even at modest levels, often serve as early indicators of returning engagement before price movement follows. They represent the quiet layer beneath the noisy exchange flow numbers. Analysts examining the February 21 Netflow data are drawing a careful distinction between what the figures confirm and what they leave open to interpretation. On the confirmed side, the evidence is direct. A net positive exchange flow of 138 billion tokens on a day when the price is sitting near 651 units and struggling to sustain any upward movement is textbook distribution behavior. Holders who accumulated during earlier periods are systematically moving assets to platforms in preparation for exits, either immediately or staged to coincide with any brief price recovery. Analysts note that positive net flow and growing exchange reserves function as structural burden on price momentum. Even when not all deposited tokens are sold at the moment of deposit, they represent available sell-side inventory. In a market where buy pressure is already measured and cautious, the expansion of that inventory at exchange level makes each incremental price increase harder to sustain. Rally attempts get absorbed by sellers waiting with position inventory at slightly higher levels. Sources suggest that the nuance within this picture involves the withdrawal activity running alongside the inflows. Some market participants appear to be repositioning rather than simply liquidating in full, as evidenced by pockets of on-chain withdrawal activity that indicate not every exchange deposit represents a pure exit decision. However, the net reading on February 21 leaves little room for ambiguity. When 138 billion more tokens are pushed toward exchanges than are pulled away from them within a single 24-hour window, the dominant behavior trend points toward exit preparation rather than accumulation. Looking at the next 2 to 3 weeks, the 138 billion token Netflow event and the pattern that preceded it point toward a defined short-term challenge for Shiba Inu. The core question is whether buyer demand can absorb the supply being staged on exchanges, or whether that accumulated supply continues pressing price lower each time a small recovery emerges. The bearish scenario flows directly from the data. If the net flow reading remains positive and continues climbing above the 138 billion token level in sessions that follow February 21, the sell side pressure will intensify further. In that scenario, Shiba Inu would face growing difficulty defending the 640 to 650 unit range. A confirmed breakdown from that zone, particularly with continued elevated net flow, could expose the 575 unit area as the next meaningful support test. According to analysts, the prolonged price downturn has already eroded confidence among retail and institutional participants, and continued flow in this direction risks deepening that erosion into something more difficult to reverse. The bullish scenario requires the net flow to turn negative, meaning buyers must begin withdrawing more tokens from exchanges than sellers are depositing. Such a reversal, combined with the modest uptick in active addresses and transaction count visible in recent network data, could provide the structural foundation for a genuine demand-driven recovery attempt. The 700 unit resistance zone would then become the immediate attention point for any sustained move higher. So here's the question for the community right now. Do you see the 138 billion plus token exchange inflow as a warning of deeper losses ahead? Or is this the final wave of distribution before Shiba Inu stages a reversal? Leave your read in the comments. That is the complete on-chain exchange flow breakdown for Shiba Inu as of February 21, 2026. If this level of data-driven analysis supports your investment thinking, subscribe and hit the notification bell. Every comment posted below gets read. Tell us exactly what price move you see coming next for this token.